For the last 6 months, all things healthcare have been in the danger zone as the cost of drugs and healthcare in general has become a major hot-button issue in this presidential election. Hey, Super Tuesday. And while this probably won't translate into any kind of real government action, the hostile political climate has made all sorts of drug companies and medical device stocks very hard to own. Take DexCom, a medical device maker that's behind the most popular continuous glucose monitoring system there is for people who suffer from diabetes. Instead of pricking your finger a zillion times a day to measure blood sugar, DexCom gives you a sensor that you can just stick on your hand, and it transmits your blood sugar levels to your smartphone in real time or to your Apple Watch, okay? But after a monster multi-year run, DexCom stock peaked last September at 103. Since then, it's plunged 36% down to $65 and change. Some of that is simply because this was a super high-flying growth stock in a market that suddenly turned against high flyers. Some of it's the healthcare exposure. However, over the last 3 weeks, the stock's rebounded nearly $20 from its lows. Now I got to wonder if DexCom has found its footing, especially since the company reported a fabulous quarter a week ago. DexCom delivered a 1-cent earnings beat off of a 1-cent basis, higher than expected revenue that increased by 55% year-over-year. Strong guidance for 2016. Has DexCom gotten his groove back? Let's check in with Kevin Sayer, the president and CEO of DexCom, to learn more about the quarter and his company's prospects. Mr. Sayer, welcome back to Mad Money.
Thank you, Jim.
Good to see you, sir.
Good to see you again.
All right, Kevin, first, just right out, how's the launch going? Because it looks like the numbers are pretty good.
Launch has been fantastic. We added a tremendous number of new patients in the fourth quarter, and the display directly on the phone has been extremely well received.
Now, this is one where you're actually starting to talk about some very big reimbursements. United Health is interested. You're getting the kind of the anthem, right? The big companies are in there trying to say, listen, you can do this, patients.
You know, 98% of private payers cover CGM in the U.S. now, and we're trying to move those to a pharmacy benefit. And Anthem and United Healthcare are two examples where we executed pharmacy contracts where patients can go to a local drugstore and pick it up rather than go through the process they go through now. So much easier and much better service for our patients.
I was surprised to see you launch this G5 worldwide. I mean, this wasn't just the United States. And there are a lot of countries in Europe that are already just saying, listen, sure, we'll reimburse.
You know, reimbursement in Europe is coming. Sweden, in particular, has been very, very well this year, and it's coming in some other countries. And we did launch it worldwide. It's the first time we've ever done that, as we said on our call. That was a big stretch for us.
Yes.
A big stretch. Well, so we're learning.
Well, the other thing that surprised me, you guys play with a totally open hand. You talked directly about the competition. You talked about the Abbott product and the Medtronic product. Plus, here I see in Diabetes Magazine, I managed to get comparing Dexcom G4 Platinum, Medtronic MiniMed. I mean, you're just out there saying, listen, we're not losing share. We're still gaining share.
Our business grew over 50% this year. In Europe, we grew just as fast as we grew in the U.S. In our biggest markets in Europe, we doubled. We're gaining market share. We're doing very, very well.
So why did you bring them up? I mean, why you talked about Abbott and Libre, and then you mentioned about the Medtronic right here at the end before the Q&A. Why did you bother to bring them up?
Investors wanted to hear.
They did.
Our people in the people at our company wanted to hear some of those things, but we don't run our company day to day for those guys. We do. If we execute our plans, we know we'll do well.
Okay, but it does seem that you were talking about best-in-class accuracy versus some of the other guys, and it does seem to be there is a bit of difference. That's me saying.
There is a bit of difference. We do have best-in-class accuracy, and it matters.
Okay.
It matters over time.
Right. I mean, I would like to think that this is something that there's not a lot of room. You know, you'd kind of want the 24/7, 999 variants. Now, Type 2 was mentioned. That could be the next big market for you.
It very well could be the next big market for us. That's why we have the Verily partnership with the former Google Life Sciences people. There are tremendous insights that somebody can learn about their lifestyle, their nutrition, and what they do from wearing a continuous glucose monitor. Right. It's different than the alerts and the alarms that we have now, where we're patients are using this to dose insulin and do things. It will be a different system, but we think it can be a huge market for us and very insightful for patients.
Okay, I want to go back there. You kind of dropped it. I was going to spend a little time on it. Verily is Google, and just tell people what that relationship is, because it seemed less formative the last time we spoke. Now you're really starting to figure out how to work together.
We are starting to figure out how to work together. Our first efforts are product development efforts, to whereby they are making lower cost electronics for the transmitter portion of our system. Right. So we can take cost out of this thing and make it disposable. And that product will focus primarily on the Type 2 population, our first product launch with them. Then we will take that electronics over time and the things we learn and spread it across the board and use it across the board.
You know what, I have to say, I typically never talk about takeovers, but I was thinking Medtronic, which has a little challenge for growth today. I mean, if the stock drops too low, are you afraid? Medtronic's a very acquisitive company. We know that.
We're not afraid. We run our business to succeed and execute our plans.
All right, I had to ask that. Now, when I looked at some of the research, people had to lower their price target simply because the stock has come down. But I do think that the political climate could clear up. Is it weird that you guys, which would save the system a fortune, basically, get lumped in with a lot of the companies? How do you feel about that, lumped in with companies that just raise the prices and really are a tax on the system?
We need to do a better job with data that shows how much money we can save and how much we can benefit a patient. Jim, I grew up a numbers guy. Okay. I would love to be able to put on the table before people, here's what you spend on our system, right. Here's what it saves you, and here's the equation, and this is why you got to have it. We're going to gather data that shows that. And when we present that data, I have every confidence we'll get the reimbursement we need.
Come on that show. I am tired of this industry. I said it last night at the top of the show. Tired of this industry being blasted because there are good actors who are saving the system a lot of money, and you're one of them. So come on when you get those numbers. That's Kevin Sayer, the president and CEO of DexCom. Look, this has got Google going for it. It's got the best device, and they bring up the competition. Who brings it up if they don't think that they're better than them? Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.